listen, you know I've been sounding the alarm for months, arguing that the economy is more fragile than it seems. But that's because I want you to be able to remain calm on awful days like today. I don't want to be shockers, right? While there are plenty of reasons to be worried here, when Wall Street starts to panic, there's a tendency to throw the baby out with the bathwater. And that can create terrific opportunities. Take Boot Barn, symbol BOOT for all you home gamers, the lifestyle chain that sells Western and work-related footwear, apparel, and accessories. Think of it as a play on what people actually wear in the heartland, something Wall Street money managers can have trouble getting their heads around. Now, Boot Barn stock has been a fabulous performer, and it's still up nearly 25% for the year. Not many can say that. But in the last couple of months, it has been hurt, losing about a third of its value since mid-September. Why? Well, some of it's because of the market-wide sell-off, but some of it is just downright inexplicable. When Boot Barn reported near the end of October, the stock nosedived from 28 to 25, and it kept sinking to $20 and change as of today. You'd think the quarter was really terrible, right? Wrong. Company delivered a big top and bottom line beat with spectacular 11.3% same-store sales growth. So what's going on here? Could the sellers be seeing something I don't, or maybe they're simply getting a terrific buying opportunity as we head into the holidays? Let's check in with Jim Conroy. Hey, Jim was just terrific when he was on last. He's the president and CEO of Boot Barn. Get a better read on how the quarter's going and how the holiday season's shaping up. Mr. Conroy, welcome back to Mad Money.
Thank you.
Good to see you, Jim.
Yes,
have a seat.
Again. Thank you.
All right. Well, we've got some big boots between us.
That's right.
I was talking to my friend Matt Boss, who just put out a terrific note, and I was puzzling. I said, listen, what's going on? Isn't this your fave? And he said, well, it's got the best growth characteristics. Am I missing anything? Did something happen in the last 4 weeks since you reported that I can't figure out?
I don't think so. Look, we've had, as you know, 3 consecutive quarters of double-digit comps. Our stores have been growing nicely. Our e-commerce business is growing nicely. Margin is improving. We're optimistic about the business and a bit perplexed about the stock price.
All right, that's what I want to hear, frankly, because I want my management perplexed when the stocks get hammered. Now, okay, so let me tell you some things I came up with. One is people are worried how much of your boots are your apparel is sourced in China.
So the piece that's directly sourced by us is probably only 7 or 8% of our entire business.
Okay.
So more of it is sourced overseas, but that is really up to the manufacturer or the brand to have to kind of import it and worry about tariffs, right? So that might be passed through or passed along to the consumer or split with the factory. But for us, our direct impact is about half of our private brand business, which is 15%. About half of that comes from China. So that is really our direct responsibility.
All right, so when you hear the president or Vice President Pence this weekend, it's very tough. Do you think, okay, we got to find another place, maybe Vietnam, maybe Cambodia?
Of course, we're looking at alternative sources, and I think the brands are looking at alternative sources, but China has a compelling proposition, right? Things are manufactured there for a reason, and I think their productivity is strong, and I think my personal view is they'll figure out a way to continue to be an importer to the U.S.
All right, now, you have a big exposure in Texas. Oil's come down. Is that area been hurt?
So I think the exposure to oil for Boot Barn is a little bit overblown, right? If we went back for the last 8 years, our same-store sales have comped on average 8%, and that includes a precipitous decline in oil. Now, in fairness, at that point in time, our same-store sales did soften a bit, and they came to roughly flat. And I think that was a combination of softness in the price of oil, but we had also just made an acquisition, and we had acquired Sheplers, and that business had come down because we were changing from a high-low pricing model to an everyday pricing. But I think those are kind of combined together with exposure to oil.
I mean, I would think that anything north of 50 and you're okay.
Yes.
Okay,
absolutely.
Good. Now, I think that viewers might want to understand that you have a good read on the consumer. You have great CRM, customer relations management analytics, and you also have e-commerce, which shows you where you could put stores. It's almost like you've got a roadmap to put up more stores, of which, how many more can you put up?
So we have about 233 stores today, and we can double that store count. And we have a roadmap for the next 10 years as to where we're going to put stores and continue to build out the country. And we do use e-commerce data, to your point. We also use a heavy dose of other data, whether that's employment, blue-collar employment, radio listenership, country radio listenership, rodeo viewership, pickup trucks. All of that kind of goes into a multivariate equation, and we figure out where we can put our next store.
Are you one of those companies that where they see what I call up in the social media and they follow me, which I never mind because I typically want this stuff. I mean, do you use Google, Facebook? Do you sit there and worry about Facebook?
We don't so much. I mean, for us, we have much more traditional media where most of our media spend is. So we are still country music radio, television, direct mail, email. Of course, we do a bit on social, but it's the minority of our media mix by a lot.
Okay. The great chart, perspective on America. You've got that famous New Yorker contract cover, and then you have pasture, forest, cropland. These are all areas you do well, huh? All different kinds?
That's right. I think what most people realize, and I had grown up in New York, but I think what most people realize is most of the country, as you fly from one extreme to the other, is people farming and people working the land and riding horses and driving pickup trucks. And I think you kind of lose that perspective when you're in Manhattan, for example.
Understood. And finally, holiday gifts. What are we thinking about for the holiday season? People still spending?
We think people are still spending. I'm optimistic for the holiday season. We're extremely well positioned with our assortment, our marketing. Our stores are fully staffed. There's a lot of concern from people around seasonal hiring. But we've been able to get everybody fully staffed in 233 stores across the country, and we're ready for the next 6 weeks of business.
Well, that's terrific. And you just got great stuff, and I'm glad you were able to put it in perspective, because a lot of people get concerned about everything these days. That's Jim Conroy, President and CEO of Boot Barn. What a strong story. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.